Okay. Good morning, everyone. Thank you for joining us in today's webinar on EXIM Bank and USDA export finance programs for Washington small business agriculture exporters. I'm Zara Castillo, Director of the Export Finance Assistance Center of Washington. Today's webinar is in collaboration between my organization, the Washington State Department of Agriculture, EXIM Bank, and the U.S. Department of Agriculture. Just a quick info of what we do is that we provide free advice to local companies on the basics of getting paid, or we help figure out different financing options that might be available for you. As part of our service, we also do referrals depending on what you need. So for example, it could be one of our agency partners, a service provider, or a lender. And lastly, we provide free export training webinars, and some of them to feature financing options like today, and some of them are export technical trainings taught by nationally recognized speakers who are experts in those topics. I should be rolling out a new set of program topics by the end of the month, so please stay tuned for that. These trainings usually cost money for companies, but we receive a grant called the STEP grant from the SBA, so we can cover the costs and offer them to you free of charge. But speaking of the STEP grant, I want to briefly mention the STEP grant export voucher program available for Washington State small business exporters. The grant helps companies offset some of their international marketing costs, so such as attending a trade show or international airfare. It also covers the premium cost for the EXIM's export credit insurance, which Mitsu will talk about shortly. There are eligibility requirements and other eligible activities aside from the ones I mentioned. So we will send the link to learn more for more information via email later too. That's it for me. Now I turn it to Julie Johnson, Export Development and Outreach Specialist under the International Marketing Program at the Washington State Department of Agriculture.
Thank you, Zara. I think I know most of you on the line, so thank you for joining us. So real briefly, we assist Washington food, beverage, and agricultural businesses to export their products around the world, from small to medium-sized companies just starting their export journey to companies already selling their products internationally that are looking for new markets. So please contact me with any questions. I am a great resource connector and available and able to assist with expert resources, top market reports, exporting strategies, and much more. And now it is my pleasure to introduce you to Mitsu Saito, the Regional Director at the Export-Import Bank of the United States.
Thank you, Julie, for the introduction, and also special thanks to the Export Finance Assistance Center of Washington and Washington State Department of Agriculture and USDA for continued partnership and also hosting this webinar. And then also thank you to all for being here today. My name is Mitsu Saito. I'm the Regional Director based here in Seattle for Export-Import Bank of the United States, or EXIM Bank, we like to call ourselves. I'm based here in Seattle and work collaboratively with our federal and state resource partners. Next slide, please. Just a quick introduction to EXIM. We're one of a federal government agency, and globally, we're known as an ECA, Export Credit Agency. So almost every country has their version of EXIM Bank. Our mission is to support American exporters through trade financing to facilitate American jobs through exporting of U.S. goods and services. So our mission is all about American jobs. Next slide, please. For some of you currently exporting or not exporting, or maybe considering exporting, these are the common export challenges that we hear from different exporters that we work with. And most of them, it's really, to me, it's kind of a common business challenges that you need cash flow to produce your products or goods. Customers start asking for credit terms, but you don't know how, and mostly you're concerned about, am I going to get paid by customers overseas? And sometimes your customer may need financing if you're actually setting some sort of a ag-related capital equipment. So what we provide is a trade financing solutions to really help you solve these challenges to export more from the Washington state. Next slide, please. Before moving on to talk about some of our programs, this is diagram of sales terms spectrum of risks. So you as an exporter, you definitely want to get paid first before you're shipping your goods to your customers. But from your customer's perspective, it's quite opposite. They would like some sort of open credit terms before making their payment. They want you to ship first before making, payment to you. So there's an inverse relationship between you and your customers when it comes to conversation regarding sales terms. And there are letters of credit and cash against documents. These two are a bank product. There's kind of like somewhere in between to help you also facilitate different sales terms to facilitate international payment. So a letter of credit it can be costly, can be complicated sometimes, but it's a very safe means of international payment mechanism. And it's really bank will be responsible to pay you at the end of the day. And cash against documents is more of a bank will going to help you with the getting paid instead of being responsible for. So there are four major different types of payment methods out there to support international payment terms. And today I'd like to focus on how to offer your international customer a credit term through open account terms. So this is more high risk to you as an exporter, but for your customer, it's a low risk and potentially help you boost more sales. Next slide, please. So when you offer terms, you're definitely going through some credit reference check of your customers, and you also need to look into country risk of the country that you're selling to. So EXIM can provide you to protect you from buyer non-payment through our export credit insurance. What this is that U.S. government will issue you a insurance policy in case of commercial and political risks. You experience a buyer non-payment, will cover up to 95% in most of commercial and political risks. And having that insurance kind of give you a peace of mind. So you feel more comfortable giving out, 30, 60, 90-day credit terms to your customers overseas, knowing that you have the EXIM and U.S. government standing behind you in case you experience buyer non-payment. And lastly, having that insurance policy ultimately help you increase your borrowing base to include some of the foreign accounts receivable to your line of credit borrowing base by assigning your policy to your lender, commercial lenders, or non-bank lenders. Next slide, please. We do have some of the different policy types, and it's kind of broken down to these three categories. So multi-buyer, we're going to cover your entire export portfolio. And we also have a select risk coverage. If you are just, wanted to cover customers' country risk is concerned, we can certainly do that. That's when you have a really good, working relationship with your customer, good solid payment history, we can only provide a political risk coverage. And we also provide a transaction or buyer specific single buyer policy if you're more of an experienced exporter but wanting to insure one specific transaction or high risk customer that you want to offer a credit term. Next slide, please. So what is covered through the insurance, both commercial and political risks? So commercial side, anything bad thing happen to your customer's company. And on the political side, anything bad happen to your customer's country. So insolvency, bankruptcy, protracted default, basically a chronic slow payment, or war, revolution, insurrection, or sometime your customer may experience difficulty obtaining US dollars to make payment. We cover that. And any cancellation of an import or export license through customers' country side. So any changes to the policy that may be impacting their ability to pay, we cover that. There are two commercial risks that we don't cover, that is disputes. We look at it as something that you and your customer should resolve it before come to EXIM, because we don't really have resources to judge who is right or wrong when you ship blue instead of red being ordered, for example. And another item that we don't cover is contract repudiation. So when your customer place an order and you prep your export orders and ready to ship and your customer cancel on you, unfortunately, the insurance won't cover that. So just those are the two exceptions to our policy coverage. Next slide, please. I want to highlight one of our brand new export credit insurance policy, Equity Express Select EQS. This is the first insurance policy that EXIM deployed, really focusing to serve underserved exporting community, including those of you who are in rural areas. And policy, provide same political and country risk coverage that I mentioned earlier. So you still enjoy that, and the insurance will allow you to still offer credit terms to your export customers. And this is really revolutionary for EXIM for providing in-house insurance underwriting process. So we typically refer you to our experienced trade insurance brokers from the application process to policy management, but instead, EXIM will provide a service in-house for this policy holders. Next slide, please. This is kind of an example of our premium structure for this policy. When you offer up to for example, 60 days, your premium is really a 55 cents per $100 invoice. So $10,000 invoice that you wanted to insure, your premium cost is really $55. And for this policy, we waive $500 policy insurance fees. So it's a very minimal cost to you, despite that pretty good coverage, up to 95% commercial and political risks. And Sarah mentioned earlier, this is a qualified expense for STEP program. And then also, if you utilize either EXIM or SBA's Export Working Capital Loan Guarantee Program, you're also eligible for a 25% discount on insurance premium. Next slide, please. Additional qualification in addition to our standard eligibility criteria, the main item is the last one. So if you previously worked with the EXIM or on credit insurance and you lapse policy for some time and you're returning to us to re-engage in that relationship with us, unfortunately, you won't qualify for this policy, because our intent is to really support previously underserved exporting community who are new to EXIM, who are new to exporting. We want them to be encouraged to start exporting out of the United States. So if you are a returning customer, previously enjoyed EXIM programs, we will refer you to other insurance policy to continue support your exporting. Next slide, please. Next program I wanted to briefly touch on is our Working Capital Loan Guarantee Program. This is a lender program. We provide federal government loan guarantee to your commercial lenders or non-bank lenders. So they can be more comfortable lending money to you if you happen to be already export-focused ag business exporters. Coverage up to 90% of the guarantee, and you can set up as a transaction specific or revolving line of credit, very similar to SBA program. And next slide, please. And this is kind of an example how this program could potentially benefit to you. This is an example of a $2 million export-related traditionally bankable assets. When you look at the blue column, without EXIM or SBA federal loan guarantee, out of $2 million of export-related asset, your banks were willing to lend you even less than $1 million, $706,000, because banks here in the United States, they're very hesitant to lend money, anything that are collaterals that are related to exporting. On the other side, when you look at the green column with EXIM or SBA loan guarantee, your $2 million export-related asset can hit close to $2 million, almost like 80% of your export-related asset can become a bankable collateralized asset to increase your working capital needs. So this is just kind of an example how federal government-backed loan guarantee could potentially expand your borrowing base if you're really heavily engaged in exporting of your Washington-made produced agriculture. Next slide, please. Lastly, I'd like to also highlight our first domestic financing solution specifically designed for export-focused manufacturers, producers here in the United States. Our intent is to really bring manufacturing back to United States, more of onshoring. So the intent of this program is for you to really create American jobs here in the United States through exporting. So we're only going to ask for up to 25%. If you qualify for small business, really a 15% of your US domestic production to allocate it for exporting, then you could potentially qualify for this program. Next slide, please. The fund can be used for purchase of a new land, construction cost of a new facility. You can even use the fund to purchase a new capital equipment that goes into that facility. And the equipment doesn't have to be a US made, it can be an imported equipment as well. And if you already have existing manufacturing or warehouse, export related, even like warehouse facility, the fund can be potentially used for expansion or renovation. So it really, the key is to, how many jobs can you create utilizing this program? That's one of the major eligibility criteria. And this may be perhaps a benefit to you if your lenders are willing to fund your future facility expansion project. Next slide, please. This is additional eligibility criteria for EXIM programs. The most important one is we typically look for US content on our insurance and working capital loan guarantee program, 51% or more. You could have a mix of imported goods, parts, resources, overhead costs, but at the end of the day, we look for 51% of more of the US content. And another one is a UEI number through sam.gov. This is a federal government version of DUNS number. That's from EXIM perspective is really when you file a claim, you having the UEI number so that we can issue you a claim check from the Treasury Department. Next slide, please. This is one of the tool publicly available to you, country limitation schedule. even if you don't work with EXIM, you're welcome to utilize this tool, CLS. We are open in 180 countries, and EXIM have already done initial country risk assessment for you as a part of EXIM being a leading government agency to provide country risk and credit analysis to intergovernment agencies, including Department of Defense, Department of State, Department of Commerce, USDA, and even SBA's Export Loan Guarantee Program rely on this EXIM's country limitation schedule for eligibility criteria. So feel free to access this information. It's a pretty powerful tool to assess your country risk at the beginning of your potential transaction going into customers overseas. Next slide, please. Lastly, I wanted to also highlight some of the other federal government resources available to you. On your left-hand side, you see a Department of Commerce. Consider them as a promotion arm of the United States government. Under the International Trade Administration, there is a sub-agency called U.S. Commercial Service. They can help you find new customers overseas. They can even vet potential buyers. If you need a single company promotion, they can help you with that. They even provide market information through their website, trade.gov. If you type in the search bar, look for country commercial guide, they have a very extensive, powerful resource available to general public. It's almost like a commercial country encyclopedia. You can look at the different countries' commercial situation, even trade finance information pertaining to EXIM support, and how different payment terms may not be legally acceptable to specific countries. So that's a very powerful tool available to public. You should take a look at it when you have a chance. And on the right-hand side, U.S. Small Business Administration, they provide both domestic and international loan guarantee programs. And anything you are looking for, loan support that are below $5 million, SBA has a very wide participating lenders that potentially you can work with. So SBA might be your resources. And as this program is also supported through STEP program, SBA is the funding organization of the STEP program, and Washington State is actually managing that program to further support your exporting and also international trade here in Washington State. Next slide, please. To recap, if you are facing some of these situations, you definitely have our attention. So please feel free to reach out to me, or even Zara or Julie, or even Colin, anybody who are standing before you today to presenting this, as we have a no wrong door policy to connect you with the right resources. Next slide, please. Here's my contact. And once again, if you need a question, support, please feel free to reach out. And then I will conclude my part of the presentation and hand this over to Colin.
Great. Thanks, Mitsu. I do see some questions in the chat box, so I want to let everyone know that we will be answering those questions after the presentations, but keep them coming. We'll make sure to answer everyone's questions today. And I'm changing the slide now. Colin?
Great. Well, thank you, Zara, and everyone else on this call. Thank you for having me. So yeah, I'm Colin Bradley. I work for USDA in the Foreign Agricultural Service. For those of you who might not be familiar with our agency, we're basically the export promotion branch of the Department of Agriculture. So half of our staff is overseas working in embassies on the ground, and then the other half are civil servants like myself working in Washington, D.C. So today I'm going to talk about two programs that we offer. GSM 102 and the Facility Guarantee Program. You can go to the next slide. So I'm going to start with GSM 102, which is our Export Credit Guarantee Program. Next slide. So I always like going after Mitsu or anyone from EXIM because they explain, why you need products like this. And what we offer is very similar to EXIM in that it's kind of like insurance. So the GSM 102 program, what this is covering is agricultural commodities and food products specifically. And like EXIM, we're really protecting against the risk of non-payment for exports of those products. Where GSM 102 differs a little bit is that our program is a letter of credit driven program. So in order for us to cover a transaction, the importer does need to be able to get a letter of credit from a recognized financial institution. And I have more slides on that later. So while that is a little bit more work, on the flip side of it, we do offer up to 18-month repayment terms. That's a pretty sweet deal for the importer's bank, and that can help unlock financing for the buyer to actually purchase your products. Again, kind of like EXIM, we also allow you to assign this guarantee. So what that means is rather than you being on the, having to wait for that whole repayment term, you can work with an approved lender in the United States and get paid at the time of shipment, thereby improving your cash flow. And then this program is developing market focused, which again, I have a slide on later. So if we can go to the next slide, please. So again, our program is a bit more limited in what we cover, and in that we're talking about commodities. And there are 4 broad categories of what we can include. So the first is food, and that can include whole foods like are pictured there, fruits, vegetables, etc. But this could also include processed products, including beverages. We've covered alcoholic beverages in the past. It could be ready-to-eat meals or things like that. It does have US content requirements, though, which I believe is above 90% for products. I know someone asked a question about coffee. Unfortunately, coffee, tea, and sugar aren't eligible for our program. There's history behind that we don't have to get into today, but unfortunately those products wouldn't count. So that's food, again, a very broad category. We also do feed products, fiber products such as cotton, and then livestock. And what I wanted to mention for livestock is that this includes both actual live animals, which we have covered shipments of, or it could cover genetics as well. So again, any food or ag commodity for the most part can be covered. If you have any questions about whether your product qualifies, we have a whole list on our website that breaks it down by the HS code, what we can and what we can't cover. And if for some reason you don't see your product there, but you think it should be covered, you can always reach out to us and we can give you an individual determination of that product. So next slide. So I mentioned that our program is meant for quote unquote emerging markets, and we define that fairly broadly. We have 3 regions where you could be shipping to under our program. So we have Latin America, Asia, and then Africa, Middle East, Turkey, Caucasus, Central Asia. So again, a pretty wide range of places that you could be going to under this program. Pretty much the only exclusions are Europe, Australia, Japan, countries on the naughty list like Iran, and then Brazil, which is a whole other history lesson that we don't have time to get into, unfortunately. Next slide. So I mentioned a very important part of our program is that we do rely on letters of credit. One thing about our program, though, is that the buyer does not need to be able to get a letter of credit from the country that they're in. So I'll use China as an example. We do about maybe $40 to $50 million of shipments to China each year. But as you can see, China doesn't have any eligible banks for those buyers to get letters of credit from. So in that case, they can go to a third-party country that is covered in that region to get that financing. So for the Chinese example, oftentimes those buyers go to Mongolia to get a letter of credit. Similarly, in Latin America, a lot of countries use Guatemala or Panamanian banks despite not residing there, et cetera, et cetera. So that is a flexibility that our program does offer. You can see that we have 75 banking eligible countries and 97 approved financial institutions. So your buyer does have choice, and they can use that too to shop around as well to negotiate for better rates for themselves when they're trying to get that financing. Next slide. So yeah, I just wanted to highlight again the benefits of using GSM 102. So obviously, again, this is an insurance program. It decreases the risk of doing business, especially in a country where maybe you haven't shipped to before, you don't know the buyer as well, or things like that. Again, we cover, if I didn't mention already, we cover 98% of the risk for those transactions. So again, a little bit different than EXIM in that regard. Yeah, and again, the other benefit for exporters is that cash flow, in that you can work with a lender, you can assign the guarantee to them, and then you can get paid at the front end of your transaction. So that way you can use the cash to further your business needs rather than waiting for repayments. On the importer side, this offers the potential for preferential financing from the bank that they're getting the letter of credit from, and that could be in longer repayment terms or potentially lower interest rates. That's something that they would have to negotiate. And I'll say up front that USDA, we don't get involved in the negotiations that you or your buyers would be doing with the lenders involved in this program. We're just providing that guarantee on top, and we're facilitating a private sector transaction, not dictating the terms of what that transaction should look like. Next slide. So eligibility for exporters, again, this is something that's a little bit different than EXIM because we're a letter of credit-based program, and the way we're structured, we don't have requirements for exporters in terms of number of years you have to be in business or any of that. You do have to get registered on sam.gov, like with EXIM. That's a US government-wide requirement. You fill out a short application on our website, but we don't do a lot of due diligence work. We're just basically making sure you're a legitimate business registered in the United States. So in that regard, it's relatively simple to get as an exporter approved for the program, and it's also free to do that. The only time we charge you is if you actually have a transaction, and then we will charge a fee for each transaction. Similarly for buyers, the only thing that they need to be able to do to participate is be able to get a letter of credit from an approved bank on our list. That's it. Again, because we have these letters of credit, we're mostly taking risks on the banks involved here, and we do that due diligence ahead of time, and that's how they get on the list. So again, eligibility is pretty straightforward for this program. Next slide. I did mention costs a little bit. So we charge a guarantee fee. That's the insurance premium that would be paid by you, the exporter. And again, we do that per the registration. So you don't need to pay to just be in the program. It's only when you do ship your goods. Other fees, of course, are going to be whatever the banks charge, interest rates, letters of credit. Again, we don't get involved in that part of the transaction. Though always free, you and your buyer can negotiate those terms. Something on the guarantee fee I did want to mention really quick is that the fee will be based on length of repayment term and risk of destination. But I will say, I was looking through our fee calculator, and pretty much everything is going to be under 1%. A specific example is Bangladesh, which is a little bit more on the risky side of a country that we have approved. And even that one, a 12-month repayment period is 0.99%. So that'd be 0.99% of the value of the transaction. So again, a pretty reasonable fee, we think, at least. Next slide. All right, so that was GSM 102. And now we're going to talk about another program that USDA offers, which is the Facility Guarantee Program. Next slide. So the Facility Guarantee Program is like GSM 102 in the foundation of that it's an insurance program covering against risk of non-payments. It's also developing market focus, so that slide, the map earlier, is going to be pretty much the same. and it's letter of credit driven in particular. So again, at its core, it's very similar to the other program. The difference comes in what FGP can cover. FGP is more for agricultural manufactured goods, facilities, infrastructure, those sorts of more capital goods related to agriculture are what FGP is for. Because it's a slightly different type of product that it's covering, some of the details are different as well. So for GSM 102, again, that's a maximum 18-month repayment period. For facility guarantee, it could be up to 10 years. That's something we'll look at a case-by-case basis on whether that makes sense. But again, a pretty long repayment term. I will also say that this program offers up to 100% coverage, but there is a down payment requirement if the repayment term is going to be above 2 years. So again, a little bit more differences in the details of the program from GSM 102. Next slide. So I just put together a few potential transactions that could be covered. So this could be if there's a new processing facility being built overseas. If you're shipping equipment there from the United States, those sorts of exports could be covered under facility guarantee. Cold chain equipment is another example that could be covered. This is not an exhaustive list for sure. And if you have a question or if you think your product is something that could be covered, you can always reach out to us and let us know, and we'll have that one-on-one conversation with you for whether it's something that can be covered. Again, it just really needs to be in the agricultural space for us to approve it. Next slide. All right, we'll skip over this one, but when you get the links to the presentation, these are all very good links to have. You can look at our fees, our eligible commodities, our financial institutions, and just a whole lot of information on our website. Next slide. Yeah, and that's it from me. Again, you'll get these slides after the presentation. But again, feel free to reach out to me if you have any questions about the program or are interested in participating. And with that, I will, I guess, cede the floor back to Zara for questions.
Great, thank you. I'm gonna stop sharing real quick so I can easily look at the questions. So I know Colin already answered this one question, and then I'll ask it to Mitsu. Will coffee production qualify for EXIM programs?
We don't have any preference what kind of commodity or products that support, even services we support. We support all in the industry sectors, so we can we can take a look at it.
And so, Mitsu, on a follow-up question, when you say 51% US content, because for the STEP grant expert voucher, coffee roasters could qualify for the STEP grant because the 51% for the STEP grant doesn't just require it to be a 51% grown
US.
product,
Yeah.
grown US product, because we're able to calculate some other information with it. Is that the same for EXIM Bank?
Similar.
Okay.
We do have our own calculation criteria. Sometimes, more complex transaction. We have a team in Washington, D.C. Handles engineering that may ask more intensive questions to justify. But long story short, you could still mix your product or produce items with imported items and goods and have imported overhead costs included to it. But at the end of the day, manipulation or value added here in the US combine cost that exceeds 51% or more, and that product or services could potentially qualify for EXIM programs.
Okay. And then my next question is, and Colin, you can answer this too, for if there are USDA rural programs too that you are aware of. How do you determine what is considered rural?
With EXIM, we go by the list of zip codes that furnished by the Census Bureau. So I think pretty much across the board through even like Department of Commerce, we use the same list. So if anyone can share their zip code where the business is located at, we can take a look and see if it's rural. We classify or define as a rural.
And I see
Yeah, and
call
then,
muted.
oh,
Okay.
sure. Yeah, and I mean, for the purposes of GSM 102 and facility guarantee, we don't really track that. So it's a bit not applicable.
So anyone could join, rural or not rural, for that for GSM 102 facility program, as long
Yep,
as they.
any size, small, medium, large businesses, we take them all.
Okay. If another company for a question for EXIM, if we were a previous customer to EXIM 6 years ago, does that count and exclude us from the promotion?
For the EQS policy, yeah, we won't be able to support it through that policy, but we have a bunch of other, insurance programs available. So I'm sure they will qualify one of them.
Okay. And then this one's a question for Colin. What are some common issues people face when they're using the GSM 102 program?
Yeah, I mean, I think it's a good question. I think that the number one thing is, engaging with the banks early on, because again, we are letter of credit driven. So having those discussions early with the buyer is very helpful. I think also too, the exporter getting registered in our system before they need the program is very helpful. We can't cover a shipment once it's on the ship and out on sea. So again, it's free to get it signed up. If you enroll, then hey, you're ready to use it if the need comes up.
Okay, and you mentioned letters of credit, so I'm going to ask this to Mitsu. Can EXIM or USDA help if my foreign buyer wants to open a letter of credit?
Yes. So letters of credit is ultimately it's a lender program offered through your commercial banks. So what we provide is similar to USDA. If you exporter or your banks here in the U.S. Concerned about the importer's bank's ability to pay that letters of credit, we could put insurance on the letters of credit for lenders here in the U.S. So very similar to USDA's program. Basically, it's a lender program. We can insure irrevocable, unconfirmed letters of credit in the event that U.S. exporter or U.S. banks are concerned about foreign banks' ability to pay that letters of credit. So typically it happens with more developing countries, right? Banks from those emerging market. Sometimes there might be a concern or questions about their ability to perform the letters of credit obligation. And we do have a very similar insurance policy available to support that for lenders here in the US.
Okay. For Colin, someone had asked, how quickly will I get paid out if I file a claim under GSM 102?
Yeah, well, if they assign the guarantee to a lender, which is what most small, medium businesses do, then they don't have to worry about that because they're already paid out. But if they want to hold on to the guarantee, we can process that in a few weeks, like 2 to 3 weeks is what we advise people. So relatively quick turnaround. I will say our default rate is pretty low, which we're proud of, but I mean, hey, that's why you buy insurance, just in case.
And then for Mitsu, could you provide more insights into the different trade finance instruments available and share scenarios where each would be most effective?
Yeah, so letters of credit, it's getting less used these days, but it's one of probably the most secure form of international payment mechanism, right? So, for example, standby letters of credit, intent is not to actually use the letters of credit, but you could put kind of as a guarantee to make sure that your customer perform to make a payment. So you could use the standby letters of credit as a form of almost act as a kind of an insurance. If you wanted to test out, actually give out net 60 or 90-day credit term, but transactions maybe $1 million, you might don't want to test that water to give out, open credit term. In that situation, potentially you could set up the standby letter of credit, and your customer's bank will put the hold on the line of credit or whatever the reserve they have until they make the payment. So there's a lot of different ways to secure your payment, especially when your transaction get more of a north of $1 million or above. So definitely USDA's program can be beneficial if you're selling to emerging market, and somewhere in between, EXIM can also help you with ensuring your open accounts receivables, or even we can help financing capital equipment purchase, or even there's a lot of different ways to facilitate export transactions with various forms of payment terms. And we can share the link to U.S. Department of Commerce. They have a 30-pager booklet, talks about trade financing solutions, what different payment mechanism can be utilized, and how each solution can be managing factors to support that international export transactions. So I think it's you may be able to share that link with the audience as well.
And basically what Mitsu is trying to say also is it just depends on each situation. There's not one payment term that fits everyone.
Right.
I have a question for Colin. Can I use EXIM products and GSM 102 together?
Well, for one transaction, you can't double dip, unfortunately. But like you were just saying, Zara, you could do some of your stuff, some of your transactions through EXIM, one of their programs, if that makes sense for that one, and then use GSM for another one. Yeah, there's a lot of options out there. Mitsu was saying this too.
Yeah.
We're all out here to try and serve you the best, and we're all just offering different tools for that. So yeah, they can work hand in hand. And something I did want to add, which I was just informed of too, is because you mentioned step grants could be used for EXIM premiums. I believe that's also now true for GSM, our premiums as well. So another option here.
Great. Yeah, that's great. I mean, that's great to know. Question for Mitsu. Could you share any effective strategies or best practices to improve my accounts receivables collection efforts?
There is a way. This is not advertised and may not always available to you, but U.S. Commercial Service, they actually have representatives throughout the world through U.S. embassies and consulates. So even if you don't work with EXIM, or you are not currently insuring your receivables, let's say if your customer is not paying, you exhausted all the solutions to do, regular collection efforts. They have also offices throughout the United States, one in Seattle. We share offices together. If you reach out to them, they may be able to have their counterpart through their embassies and consulate network, and actually phone your customer directly asking for payment. And this is not advertised, may not happen all the time. It does not guarantee that you're going to get payment, but potentially this could advance your pending payment to get it actually paid sooner or later.
I'd like to ask this question to Colin, and you can answer this later. Is that the same for the Foreign Agriculture Service that are posted in the international markets as well? Or we can answer that question later too, or follow up with that.
Yeah, I think I'll follow up on that one because I don't want to misspeak.
Okay. That's all the questions I have. If you have any questions, if anyone has any questions, I know we answered so much questions today, but please type in the chat box. Now, after the webinar, if suddenly you realize, oh gosh, I have more questions, you will receive all the slides and everyone's contact information will be there. And feel free to email, call in, or Mitsu. You definitely have Julie's contact information. Everyone here knows Julie, so email Julie as well, or you can email me as well too. Before we close out, Julie, is there anything else that you'd like to add?
I don't think so. Thank you.
Okay, I'm looking if there are any questions. Sorry, I just saw something in the chat box. Again, thank you everyone for joining. Everyone will receive the recording to the link as well, and you will hear more from me. Thank you for the speakers. Thank you for Julie for helping us with this program, and we will talk to you later.
Yeah, I guess there is one thing I'll mention. I'm going to add this to our website. So we have a resources page. So it'll land there until we do the next one and kind of update, the information. So, so thank you for joining us. I really appreciate it.
Thank you. Thank you, everyone.